So what happens to real estate during high inflation? In this video, I'm going to show you exactly what that relationship is all about and why and how and all that good stuff on how you and your family can make some really good money on this. What a lot of people have a misconception on is inflation is bad, real estate good. That's not really. They just are what they are. I'm going to show you how that relationship is important for you to understand, and then you can make great decisions. So stick around. And by the way, stick around the very end. I got a little bonus for everybody if you stick around. It's gonna be a short little video. This will show you how to make this happen and how you and your family can make money during inflationary times, up or down. It doesn't really matter. Okay, but you need to understand the relationship. So let's just talk about that. Real estate is always talked about. Real estate's a good hedge against inflation. So what does that mean? If I have a stack of money, and let's say it's $10,000, okay, and I have a very secure place that I put that and hide that money. Let's just go that route. If inflation's at 6% a year, no, it's 5%. Let's use 5 because it's an easy number to do. That means that $10,000 is losing 5% of its value every single year, okay? So if I leave it in that secret hiding place, I'm not gonna tell you where it is, okay? Because it's secret. There's $10,000 there. I'm going, and I go back to it, in 5 years, it's lost $2,500 in value. That's not very good. So the hedge against that, if I know inflation's gonna be at 5%, let's say I have a crystal ball for the next 5 years, how do I make sure my $10,000 is going to be worth $10,000 or maybe even more about that? That's where real estate comes in. So if I take that $10,000 and I buy a piece of real estate, the real estate is going to go up in value, okay? Sometimes it goes up and sometimes it goes down. I'm not guaranteeing that. What I'm saying is typically over time there's going to be cycles, but you're going to have, historically, real estate's gone about 5%, actually, now that I think about it, okay, over time. But on top of that, not only is the value of the real estate going up, but my investment return is going up because I might be not just getting 5% value increase in the piece of real estate, which saves my $10,000, but I'm also getting more money when inflation goes up from rent and everything else, because if inflation's going up, my cost to maintain that property is going up, and I'm gonna pass that on to the consumer, which is gonna be my tenant on that. This is why you always hear inflation is the hidden tax on everybody, because it really is. Everybody's experiencing that right now as of this recording, at least. Eggs are a perfect example because eggs were, I'm going to make it up, like $2.50 a dozen. Now they're up to $7.50. There's still 12 eggs. They're not giving me any more eggs. So it's costing me like 3 times as much to get the same product. I have to make more money. I have to stop buying things over here so these people stop selling things. It's like I've said in other videos. This is like a dog, so to speak, chasing its tail, if you will. So, this is what happens. The other thing that happens with inflation or real estate when it comes to inflation is if I'm a builder and I'm building 1,000 homes, each one of those homes has a fixed set of cost on there with doors, air conditioning, windows, carpet, hardwood floors, all the appliances and what have you. Those start to cost me more money. So literally as a builder, I am watching the inflation numbers very closely, okay? Because I'm looking at that, I could say, okay, we're gonna stop building right now. I'm gonna wait till it gets to this number over here before I start again because I wanna make sure I can buy my product of that. If I've got runaway inflation on that, I have no control of my price. Not only do I have no control over my price, but I've also got a situation where the cost of the product that I'm selling is going to go up, and I might be not have any buyers because they've got to make more money to buy that. Interest rates have got to go up because inflation is going up. They're trying to cool that down. It's really kind of a very delicate balancing act. And so you have to understand how inflation affects real estate when inflation is increasing in the price point on that. And that's just what you're looking at just when it goes up. Now, very rarely do you have deflationary times. Usually when prices go up, they kind of stay up there. I've seen it a couple times in my time frame in the early 70s where you had a deflation. You don't want that. okay, where prices go down, and it just, I don't want to even get into that, but that's not good. But that's why you see, like when I was a kid, you know, you could buy a movie ticket for 50 cents. And back in the late 60s, early 70s. And now, you know, what's a movie ticket anymore is a lot of money. That's inflation. That's exactly what that is. It's not going to start going down in price. We've got other issues if it does happen that way with that. So how do you fight that inflation is just buy real estate. You buy real estate and that'll keep that pace on it. You can't go wrong. I mean, you gotta look at it this way. And I know that there's a lot of people say, oh, you can do all these other things. I get it. Listen, this is my lane. I stay in my lane. What I have seen over my 30 years of investing in real estate is that it's always a good deal in the long run. I will tell you this, I've regretted every property I've ever sold 5 years later. There's no doubt about that. So, you know, there's two ways to make money in real estate. There's buy, fix, and sell. That's making money. There's buy, fix, and rent out, and that's building wealth. I got somebody that's paying down that, you know, property. I'm over here doing my job, let's say, so to speak. Your normal Joe Blow and Betty Sue, and you're going out there and you know, working a job, paying the bills, sending the kids to school. Meanwhile, I've got a couple of properties over here. They're cash flowing, they're doing good, but as life gets going, I'm making more money. Those are still making money, and I'm trying to pay that debt off, so I own them free and clear as quickly as possible. That's why you don't want to get ahead of your skis. That's one way to do it. The other way that I like doing it is through tax liens and tax deeds. So I've talked about liens, and let's talk about deeds. So I can go back in time and buy a property before the inflationary impact hit that. So if I've got properties that are now $500,000 that just 2 years ago were $350,000 to $400,000, how do I get it at that price? Well, one thing that I've been doing for 30 years is going into the county, and when a property owner has failed to pay the property taxes, okay, some counties, about over 2,000 taxing jurisdictions, we'll call them that instead of counties, because sometimes it's township, and I'm not going to get into that. Okay, so they'll say, hey, we need this money. Okay, so if a property owner does not pay the property taxes, okay, well, let's stop. Does the county need that money for the property taxes? Of course they do. This is the most pure form of government there is. Property taxes specifically go to the county services. Schools, probably 55-60% of all property taxes. Then you've got police departments, fire departments, roads and bridges, hospitals. I can go on and on, right? That's the infrastructure they have. We need this money. So they'll say, okay, we'll give you some, we'll let you not pay for a year or 2 or 3, but at the 4th year, they're going, come on, enough's enough. We're going to have to foreclose on this property due to delinquent property taxes. This foreclosure will actually eliminate all liens and encumbrances on that property. Yeah, you've heard that right. So everybody gets notified that this is happening. So when that happens, okay, it goes to the sale. I put my hand up and say, I'll buy it and I'll pay the back taxes. Let me give you a real life scenario. There's a property recently that's worth $350,000 that somebody bought for $148,000 in delinquent taxes. Well, they went way back in the time machine and got that property way back there. Now, it needed about $100,000 worth of rehab to get it up to the ARV after rehab value of $350,000, but they still got a $100,000 discount on it. That's how you can kind of game the system, and I've been doing that this is not some fly-by-night get-rich-quick scheme. This has been around for over 250 years. Now, there's a lot of information that I can fill the gaps in on that, but this is what I want you to do. This is your little bonus for staying this long. Click the link down below. It says HigginsMethod.com. HigginsMethod.com. Just click on that link. I've got a brand new training course on there for free. It's my gift to you for staying this long. That'll show you exactly how to set this up. This is Saen Higgins saying God bless and good luck. We'll see you out there.